Now we've got another panel discussion, so I'd please like to invite onto the stage Frank Salzgeber, Head of Innovation and Ventures Office at ESA. And he will lead the panel discussion with Phoebe Smith, who is also here. You can come up to the stage if you wish. Phoebe Smith is the Senior Director at Patrizia AG. We unfortunately don't have Aleksandar Vucak because he is ill, but we do have Kareem Barbir, who is Head of Commercial at Open Mineral. And they're going to discuss something that is not quite adjacent to following on from what we've just had, make resources and the moon bankable. To discuss the next steps, the initial steps to integrate tradable space resources into commodity trading markets as well as the asset financing. So it's over to you, and I will just scan any questions that come from the audience.
Perfect, so much. Thank you for having us here, and first, thank you for you both coming in person, because this is not your normal job. You're far away, so Phoebe said just the robotic is pretty cool what you have seen, and hopefully with the mining you're a little bit more closer, but I'm not selfish now, and I would give right away the floor to our guests to let them introduce themselves, because they have a vita which is not typical maybe for space, and then we go a little bit to the subject, which I didn't did I get right? It's negative, make it bankable, or was that?
Well, we've just had an awful lot of topics discussing who owns space, the law regarding space, getting communities on board, and so you're about to say how we can sell bits of space.
No, this is good. We discuss it. Or
we have a bit of a leap before we can do that, I think.
But I give the hand first to Phoebe. Thank you so much. You had a long trip, and we are very grateful that you're with us. But Phoebe, what is Patricia? What you're doing there? I know the company very well, but I think some of the audience not.
Thanks, Frank. My name's Phoebe Smith. I'm a Senior Investment Director at Patrizia, who are an investor in real estate and infrastructure. And I come from the infrastructure side of that equation. Patrizia have about 50 billion euros in assets under management, and really look for real assets. So we are looking for, on the infrastructure side, essential services, long-term, very visible cash flows, if you like, and things like the airport that brought you here today, trains, ports, energy generation, transmission, and distribution, communications, right across the spectrum of infrastructure. And my job is looking for those new infrastructure opportunities and also managing them on a long-term basis. So the majority of our capital, our investors, are pension funds and very long-term investors looking to match those long-term liabilities that they have naturally as pension funds with infrastructure assets that typically are also by their nature very long-term investments. You don't build an airport and knock it down a year later, you build it for the long term. And therefore, it's a nice match in that sense. And that's part of the planning that we do in terms of what makes an infrastructure investment attractive for us. I might stop there for now.
I think we go later into that, because I note down some along these which may be stuff in common. Kareem, when we speak about minerals, this is a field where you work, but minerals means more than copper and gold, and I think this is the field. We speak about resources, we come to that later. Kareem, what is Open Minerals? What do you do?
So, thanks for your introduction. Open Minerals is a company which helps producers of minerals and metals and consumers in terms of financing, where's best to market their product, how to market their product, what the intrinsic value is, and how to get the best value out of it. We help people at all sort of lengths of their production, from pre-production through to when they have something on the water and they need to find a home for it. So that's basically what we do, and we use digital technology to help facilitate that. The industry that I'm from is rather antiquated, so what we're trying to do is bring it to a more advanced level in terms of cutting-edge IT and this kind of thing.
So make the mining industry digital, so something like that?
To an extent, yes.
To an extent. The title is Make Resources in the Moon Bankable. And this is not selling the moon, because maybe it was a little bit provocative, the title, by purpose, of course. The people know me, they would say Frank liked to do these kind of things, because it keeps the attention of the people, and having nearly a full house, no, that's not the fact. Everybody is not there. It's bad luck, because we speak about really how certain activities can be financed, beside that the government or the agency just pay for it, because maybe that in the space resources is the common ground. We want to bring you a little bit to a stage how infrastructure, and I heard about some points, real assets, long term. So when we speak about a power plant on the moon, that is a real asset, but we go to that later. Maybe we go first. The market today, Phoebe, when you have we take the example of an airport, hopefully we also have an airport on the moon, because we have to arrive somewhere, but maybe a power station, a solar power plant, how would be the process and the steps, to explain it to the audience, when we would do that in the Middle East, in Australia, or in the UK?
Perhaps it's helpful to sort of step back a little bit in time and think about, not that many years ago, going back a couple of decades, if you were building a new airport, it would be the government. So it would be sort of the situation perhaps that we have today with space. It would be expected that the funding for that came from the government. It would be a government-held asset. And over those last 20, 30 years, we've seen a huge wave of privatisation, where the view is that we can finance these assets more effectively from private markets, and find better ways to finance infrastructure investments. So countries such as Australia, where I'm from, and Canada in particular, sort of led the way to a certain extent with some of this. And today, you'll find a huge market for private infrastructure investment. And so, to a certain extent, we've been on this journey already here on Earth, where we've looked at it from a different perspective and said, it doesn't have to come from the government. Where those investments are economically viable, like, say, an airport in a capital city, that's a fairly easy assessment to make. You know you're going to make money. You know where the demand is coming from. And I can look at that and I can say, well, I'm predicting that 100 customers are coming through and they're going to pay me this much, and I'm going to hold this investment for 30 years, and there's my return. And that makes sense. Where obviously things get a little bit more complicated, and we can apply this to other markets, is where that demand may not be there, or the willingness to pay may not be there. So a good example of this is, for example, rural situations, whether that's for a toll road or a fibre network, where there might not be enough customers to make that economically viable. So what happens then? You still want the government to step in. And we've seen very successful models. If we look at fibre right now, for example, in the UK, where we're investing, and government subsidies are making those economically unattractive areas viable for investment, so that we still do get that penetration across the entirety of the country. And that's another way to make those situations bankable.
Is that a more public-private partnership, or is there a certain guarantee of revenues?
There's all sorts of models that can work. Public-private partnerships have been very successful for a number of years. The example I was referring to at the moment in the UK is where the government gives you a voucher to cover the cost of the capital build. So you build the asset, they pay you back for that, and then you connect the customers that are there and take that revenue over time. Okay, excellent. There's a project with some colleagues called Moonlight. I don't know if you heard about that. I think we give them vouchers maybe to our customers. But okay, I take note of that. This is going really from infrastructure. And Kareem, you said you help the classical mine industry to step towards to digitalization. What is the normal way? We heard that before. We would have a new area where we expect certain minerals.
How is a mine created?
Yes,
okay.
On the financial point of view, not the technology one, because this we leave to our colleagues here.
Well, it's probably better if I explain the process by which a mine gets built. So it starts off with a geologist. The geologist has a fairly good idea where a mineral resource might be, and that geologist might turn into a junior mining company. Junior mining company has no license to mine. It has some rights to mine, potentially, and has a resource deposit, which it then uses and raises money, usually in equity markets, to try and get the money to do a proper survey, which would require drilling and this sort of stuff to make sure that you have a decent deposit. Most of them run out of money before anything happens, by the way. The sort of success ratio of a mine project is extremely low. There's literally thousands upon thousands of junior mining companies. And then if they don't run out of money and they do have a decent deposit and the economic conditions are right, then someone will finance them into the next step. Often that's a major producing company which will take an interest in them and basically buy them out at that stage and develop the asset if they deem it to be economically viable. That itself is a very long process because what you need to have is permitting, various negotiations with local communities, which can take many years. The time frame from the geologist having a rough idea of what's going on the ground and actual production can be 20 to 30 years, which is quite a long time.
So that means as a job of the agencies and the government would be saying, helping the geologists finding the right mines quicker and helping them to de-risk them for the junior companies. And so, okay, the production companies buying that out, so the risk for the junior companies are with VCs.
Sorry?
The risk, who's financing these junior mining companies?
Usually people who invest in junior mining companies, which are people who take an interest in the specific underlying commodity.
Okay.
So, within gold mining, you have people who are interested in the gold price, and they use junior mining companies sometimes as a proxy for that. Mm-hmm. And then there are people who are sort of herded together by the investment community to take a highly speculative view on these equities. Look, if it works, you it's 1,000% return sometimes, right? So.
When we spoke in the debriefing of this, and this is also something when we're coming from the junior mining company, when we go into the production, you still sell what you have in the mine before, or you can sell it even before you ship it.
You can sell things before you ship, yes. But the value of that is dependent on the probability that it's going to get produced. So with all things which are, less tangible, and if something is unknown, it's less tangible, the price is cheaper the less you know. So
I think this is something we may later in the discussion when we come to the question. So that means when I have a running copper mine and I ship copper from Chile to UK, which you told me is a 3-month cycle or journey. So that means the likelihood that copper could arrive.
Okay. So there is, if something is, we're talking about a futures market, which is a different thing. So a futures market is a market where there is a standardized commodity with a standardized time frame, usually a standardized delivery point, which is known, and there is an exchange underlying that, which will guarantee to the performance risk of the other party. So within that parameter, you can get a guaranteed price.
I'll come to that later, but before maybe we go a little bit back to the solar farm we said, and then you said before you were watching some of the sessions today, and I said, interesting, solar, this is something which you do already today. So what was your thought with saying, okay, building a solar park on the moon, building a solar park on ground?
It's certainly sparked my interest, shall we say. One of the big things that most infrastructure investors are looking for is sustainability. And so like like many people, we're very interested in renewable energy, in solving sort of the energy transition puzzle, if you like. So moving away from hydrocarbons, and one of the big problems, as you all know, with renewable energy is that it's not great at providing baseload capacity, because you can only produce solar when the sun is shining. But if we find ways of addressing that with some of these new technologies and using space infrastructure, that could, make a huge change to what we're doing here on Earth. And I think in terms of making the leap from, I usually describe infrastructure investors as, sort of very risk averse, making that leap to something that, if you said to them today, do you want to invest on the moon, they'd all run screaming from the room. Making that first step is potentially something that solves a problem here on Earth, where they understand the demand, because it is, addressing the energy demand here, could be the first step to investing in space.
So we make it swallowable for the investors. That means laser communication in space is close to laser communication on ground. Solar parks. So we have to build an airport on the moon, because this is cells. So, but going to that maybe as an example. So we would have an infrastructure that could be then maybe the state is building it and then privatize it then via a company like Patrizia, and finding pension funds. Okay, maybe not pension funds, but I think not everybody knows that the Luxembourg government, when SL Astra was having the first launch, was giving part of the pension fund of Luxembourg as a guarantee. Is that correct? This is a story Kenneth has told me. So therefore, there's a good history in giving pension funds and use pension funds. That was maybe a more creative way. But is it easier to build it from scratch, or it sounds like easier you have an asset and then privatize it?
It doesn't have to be. There are plenty of opportunities to invest in what I would call greenfield development, so building something from nothing. We've done that historically and wouldn't shy away from that risk. What we struggle with is when it is what I would call development risk as opposed to construction risk. So when you don't know if I have the regulatory permits, for example, to build, or I don't know that the market is there, which would be the case for, on the moon today. I don't know that there's a market, that anyone is going to buy the product that I'm selling. And so that is where they would struggle, rather than the actual build as an of itself.
Okay, you see where I want to go to. There, the infrastructure, there is a gentleman who has an idea to make. So going back to the future. So when we have future, which are maybe not so sure that they will be delivered, I think orange juice, soya, this is something I do not know if I get it next year. Or there could be also of war. We just recently have this problem in Europe. So there's always an uncertainty. Of course, this goes to in the price. When we look long term, what is the longest future you know? Everybody knows what is the future? Should we explain it? Yeah, it's fine. You're all space engineers. Maybe we explain the future.
So a future is basically a contract to buy something at a specific time, which is predefined at a set point in the future. Okay, that's what a future is.
So normally, it's for oil you do that.
It comes down to it has its origin generally in farming. So where a farmer didn't know what price it might get, but still needs to farm, and the consumer needs to know, they would find a way of basically buying from one and selling to the other, and one gets a stable price regardless of whether there's a drought or there's a massive surplus which completely reduces the value of whatever they're growing, and that creates stability. So that's the original concept of a future. It's a financial instrument to create stability of income. So you can actually have a proper business based around something which goes up and down. Then you have liquidity, which is provided by people who want to take a view, or people, this sort of thing, and that makes the entry into such a contract more feasible. If we go back to sort of the topic itself, really, which is trying to sort of work out what framework could be or how to get to a situation where such things as, sort of mining on the moon or having a base on the moon or whatever is economically tangible and feasible, and how this could happen. That's very much like very far down the line, right? What would be interesting to work out, and as you guys are very much technical-minded people, and you're looking at solving various problems within engineering and science, there will be a whole load of problems which need to be solved, which we can assume are solvable, okay? Which is someone is going to build an operation on the moon, okay? In I don't know how many years, because I'm not au fait with latest developments of technology, but it will happen at some point. So you will have a moon base. What is the moon base doing? Is it there to provide commodities back to Earth, or is it there to do something else? There's a lot of resources available there. You have helium, you have water, you have the ability to harness solar power, iron, etc., which is a lot cheaper to produce probably there than on Earth if you're re-exporting that somewhere else, but not Earth. So if you want to do deep space exploration, it's going to be cheaper to build something from a platform like that.
But that means when we're looking to the future as a way to finance my mine, my operation, this you do when you have the operation running. You do not sell futures when you have no ships yet.
No, of course not. Because like if it comes down to tangibility, which is what I said before. If something's not tangible and there's no track record of it, it's highly speculative. If it's highly speculative, people may want to invest, but they're not going to invest anything close to its intrinsic value. Right? There might be an asteroid which is worth
that's for the
100 trillion intrinsic value, but what is
the bad news? The good news is there's money out there. The bad news is you have to build it first. So only that, taking that as a subject.
So it really comes down to if there is an economic thing which exists to get to the next level of sort of space development, the best way of selling it is to create a more tangible story, which could be you work out, okay, it costs this much to extract energy from some source in the moon, and it would be cheaper to refuel satellites on the Earth from there. Then you have a business case. Or an alternative is, maybe the fact that there's no oxygen and it's a vacuum environment on the moon is really good for some form of industrial manufacturing, right? Or maybe people want to have nuclear power stations, not on Earth, but on the moon or something like this. But these things I have no idea about because I'm not from an engineering or science background. But if there's a tangible business case, then economics comes towards it.
Maybe, Lisa, we do not do always the questions for the panel and the audience at the end, so giving already the chance in between before we go along, because otherwise we squeeze them always at the end, which is not very nice.
Thank you very much.
From the moderator point of view.
That's very kind. Something? Yes, we do. We have one directed to you, Phoebe. It's from Lorenzo Dorigo, who says, would the Starlink not be bankable?
It's an interesting question that I think there is obvious demand for Starlink, and it's already connecting customers, so that's a big tick in its favour. Going back to the tangibility point, I haven't dug into the business case itself of Starlink, but I understand that they're saying that they need something in the order of $20 to $30 billion more to withstand their business case, which suggests that it's not as economically viable as I would like ordinarily for something that I was going to invest in today.
And that comes to Simon Drake's question. I don't know if Simon Drake is here. He's often here, but perhaps not this time. Given risk aversion, on that point, how can one de-risk the financing of new space resource assets?
Good question. I think, if I sort of apply what we do here on Earth to a theoretical future where we're investing in space, it comes down to we want to know the demand is there, as we've already discussed. We want to understand the regulation. How is our asset being protected once we build whatever it is? And how is the market being protected? Typically, an infrastructure investment is a big thing that usually has some sort of monopolistic characteristics. So how is that being protected, or how are the customers being protected from me just gouging them? There's usually regulation that's clearly setting out that market and that protection of that market. And then it's about cost certainty, so understanding how much is it going to cost me to build this, and how am I going to maintain it? Is it going to be, I think, there were the sessions earlier this morning on robotics were certainly really interesting, because it suggests to me that at some point in the future, I won't need to be sending people from Earth to maintain that asset, but do I have that ability today? Will be a big part of my business case. And I think all of these things will require a lot of work from government support in terms of the regulation, potentially subsidies in the early days, but also, it's time, it's building the market.
And one more question from Clive Neal, who spoke yesterday. Is resource prospecting bankable? Understanding the reserve potential of space resources is certainly enabling, but is this in the domain of space agencies rather than commercial companies?
Maybe you want to take it, or should I take it?
Yeah, I'm not aware of any legal framework which everyone agrees on. So
well, that's what we were just discussing.
If there's no legal framework that everyone agrees on, it's questionable about how bankable a claim to anything would be, right?
I think this we discussed in the session before. We know what the legislation in Luxembourg is. We know the Space Act agreement with another. So this is questionable. On the other side, we have the same problem on the space station. There's a Russian segment, there's a US segment, there's a European segment, and the local or country law applies in that part of the segment. We just saw in Ukraine what happens when people not respecting certain regulations. So this can also be maybe on the mooning and the mining. Maybe it's harder to reach. But I think this is a certain risk which will remain. Can agencies protect it? Yes. I believe, yeah, this is the job why you need organization like the European Space Agency, NASA, because it gives a certain stability. But it may be also, is the customer willing to buy the resources from the unregulated sources? Then we go to the Congo during the wars and so on. So I think these questions remain, but the same question we also have on Earth. Huh?
Look, you have a long history of humanity where people have, endeavored on massive expeditions with, very tenuous legal claims to things. And still, went on with it. Sometimes that was successful. Sometimes that was a massive failure.
Depending on the point in history.
So these things have happened in the past, and maybe this is how it evolves into the future. I can't really say. It's a possibility, but hopefully it's under a more organised. Sort of well thought through framework.
The good thing is if you have exhibitions in space, at least they have to be scheduled, and we are aware of it. But just kidding. So when we go back maybe to the point when we speak about, and I really like that, helping the mining companies become more digital, what would be the advice you would give, listening now a little bit to the questions from the audience and from the people and from the space community, say, well, these are the things you really should take really careful. I like that it's tangible. I think that was one advice I get out of it. Is there other things we really can learn from the financial point of view when we're building up and produce resources, minerals, materials in space from the financial point of view? So these are things you really have to watch. Not technical.
I was going to answer that with the technical one at the beginning, but I'll make an observation that, you know, some of the mines I've been to do look like they're out in space, you know, very remote locations. And you have similar challenges today in terms of automation that exist with, you know, mines on Earth, which will be used to help solve problems for, you know, potentially doing things in space. So it's, you know, in terms of advice, is if you, you know, collaborate with the mining industry who are looking at more and more remote locations and challenging environments, that's probably something that would benefit this industry. And then, yeah, look, it's basically, if for some, you know, reason you can identify something which does have a measurable economic benefit, people do invest in such things, but it needs to be measurable. Otherwise, yeah, it's more difficult. But I honestly think that just as this sort of, you know, satellite industry has evolved into something which is more commercial than government-led, this is probably how it will evolve, right? Over a very long period of time, is you will have a government body, a group of government bodies, which will make an initial utility-style investment, because that's what governments, you know, primarily there for, is to invest in utilities. And one could argue that these things are ultimately utilities. And then there will be ancillary commercial capital, private capital funded ancillary developments off the back of that, just like we can see with what's going currently on with, you know, SpaceX, etc. So
in the phone brief, we spoke about something which we're looking. We have so much mining, and you spoke about a phenomenon which was the South Sea bubble in the 1700s. What was that?
That was a speculative bubble, where basically there was a claim to a specific part of Latin America, which was meant to have vast wealth, and didn't, and lots of people lost money. You have that. Then there's the Darien expedition, which was where, and this is an interesting case in point, actually, this one, because I think it was like a third of the GDP of Scotland at the time was invested in this expedition, which didn't go very successfully. And the consequence of that was that the Scottish government was in debt to the English government, which is one of the reasons why the union with England and the UK, essentially, was created.
Oh, interesting. Okay, we have to take care that the space budget is not coming to our third of GDP.
No, but
okay, the ministerial is coming close. Is our member states come together, give us money? So a tenth of GDP is okay. Just kidding.
Yeah, GDP measurably was a lot less in the sort of, I think, like sort of 1690s, I think it was.
Was that the claim in the UK? Somebody told me, when my ship returns.
No.
Okay, good.
Sorry, I'm trying to remember what you're trying to say.
Okay, so when my ship returns, then I become rich. Okay, that is fine.
Different story.
I take that one. I like the GDP one. I give that to my boss and say 1/10 is a good measurement to be safe. Otherwise, you become Scotland into the Union.
But I think picking up on the point about learning from mining on Earth, I think the same can be said of infrastructure. I was speaking to someone earlier about satellites that can monitor our infrastructure investments, for example, where you've got big gas pipelines that are going through.
Are we doing that? That's standard.
But my point is where you can show that there's a business case for that on Earth today, because we're coming at it from a more ground-based solution where I'm putting sensors on everything. We're looking at a lot of IoT solutions for things, but perhaps I should be looking to space for that instead. And the more we can work together to trade these ideas, the more that we will get comfortable with the technology and taking that leap from the ground up into space.
Mission to you, we have to convince the financial community as usual. But this is fine, but we did that. There was a nice case yesterday, I don't know if you heard that, where some tractors from John Deere were nicked in the Ukraine to Russia, and John Deere shut them down. So they switched the power off. So this is what space can do. We work globally. Going back to the advices, we have 10 minutes left. I have some. Do we have still 2 or 3 questions, or?
We have one question.
Also here in the audience, this was all online. It's all coming by your computer, even here, these people.
Yes, but they can talk as well if they
so-
want to, but they
so
are
this
meant to
is,
be messaging in. We've got
You're sitting here, some other people sitting in cafes and texting us and enjoying margaritas and so on. So if you have somebody in the audience,
Well, I think they're writing online as well.
Yeah, you're raising online?
We have a question here. I'll repeat the question so our online audience can hear it. And just say who you are as well.
Yes, I'm Jonathan Slavic. And my question is looking at the financial instruments for privately funding mechanisms. We sort of landed on the idea that these first infrastructure investments may have to be government. You kind of touched on the idea that futures may be an option to get investment prior to construction.
I'm sorry, I'm going to ask you to start again now that you have a microphone so everybody will be able to hear you online as well.
No problem. I was just curious if you had, my name's Jonathan Slavic, and I'm curious if you have any other thoughts on sort of financial mechanisms that are perhaps more out there for funding of, as you call them, greenfield construction projects. We talked about those being government funded possibly, like utilities, or possibly using futures to develop those projects, but I'm curious if there's others.
Futures, I hate jargon around finance because basically futures are an instrument that would be, you could never finance something that, on a project basis, futures. There's other similar sort of tools that one could use which have different jargon. So for example, if you had a sort of fixed revenue stream based upon an output, there are certain things. In mining industry, you have streaming agreements. So a mine, prior to production, might sell its silver against a fixed price, which would be much less than the market price for that, as a streaming agreement, get paid money up front. Okay, large companies exist which actually just solely do that. Silver Wheaton is one of them, for example, which is just massive. So that is a type of way that one can, within the mining industry, one can finance pre-production. But the criteria really then is if you have a tangible product which people agree what that market value is.
and maybe this is super important for you both. It depends really on the timing, because if you do that too long, you sell your resources too low in terms of market price.
You can do. Sometimes things get worse after you've produced.
Sorry, Phoebe?
But
From an infrastructure perspective, it's typically that we look at bringing project financing in that is designed exactly to do this, that typically will be a mix of equity from people like me and debt from banks, and it will be provided on a business case. Perhaps going back to the solar farm idea, you'll know that you're building X number of megawatts and that you can sell them. Perhaps you've already signed a power purchase agreement, a PPA, with someone who wants to take that electricity. So the bank knows they're going to get paid back. I know I'm going to make a return. I've signed an agreement with a contractor who says, I will build this for this amount, and the time it takes me to build it and the cost to build it is my risk. So I've passed all that out, and I'm happy to invest because I know what those returns look like.
Going back to what you said, also it depends on the nature of the idea, right? If the idea is very inspirational, then there are alternative methods of financing. So generally, if you're funding an idea rather than a product, you're limited to equity investment, right? That can be public equity investment, so you do an IPO, whatever. Or you get venture capitalists who will then take equity from you. It's an equity investment. Or you go to your friends, can you give me some money, and you have a share of my company. But if the idea is so transformational and inspirational, maybe things like crowdfunding platforms and this sort of thing can be quite good. It really depends. You have to look at who your customers are, and if there's lots of them, but they don't have a little bit of money, then maybe this is the way. But it really depends on what your idea is.
And therefore, it depends really, when we're looking to infrastructure, really what is your product, what is the value chain, where is the demand? I take one question before my closing.
Scott Bryson, well, I can tell you both questions and then you can choose which you answer. Scott Bryson asks...
You choose, you take one.
Okay. Scott Bryson, how are strategic reserves financed on Earth today? Could this be a pathway?
The strategic reserves of the government.
Are we talking about sort of, for example, the United States have an oil reserve, or China has strategic reserves of copper?
He doesn't specify which reserves.
Okay.
He's the founder of Orbital Farm, and I'm not sure where Scott's based.
So that really comes down to, the purposes of strategic reserves is to provide commodities which are essential for economic activity, which is the primary purpose, to provide that in case there's a supply chain disruption from an accident or war or whatever. So that's the base reason why you would have a supply or strategic reserve. There's an ancillary reason, which is that you can use that to moderate price and control inflation. For example, if you're consuming lots of oil or metal, you may want to buy more than you need and then sell it when the price gets too high. You crush the price and keep inflation under control. So I don't see under that framework any.
So, but it could be maybe
from an infrastructure perspective, we do actually invest in a strategic oil reserve. The asset, the tanks that hold these strategic oil reserves for one particular European country, but we don't own the product. We own the infrastructure that houses it, and then we have a contract with the government because, as was just pointed out, it's solving for a very specific problem, but we like it because it's a very stable contract. Doesn't really move, and we've got one customer. So it's a very simple business plan, a very low risk solution.
Okay, the Luxembourg Space Agency builds then the strategic oxygen and water reserve tanks on the moon.
I'll take that contract.
And you take the contract, and we sell to the people which are running out of air.
We have one more
for market price. One we go looking to time, and there's also Swiss roots want to stop. One last question from the audience.
Yes, there's one from the floor here.
Thank you very much. So everyone wants to be a second investor, yeah? And you know that we're in a world where the only certainties are death and taxes, yeah? So how can I get infrastructure or projects that are crucial to humanity's well-being and future actually funded? Thank you.
Sorry, I missed the beginning of the question.
Everyone wants to be a second investor. There's no
a second investor?
Yeah, no one wants to be a leading investor. Yeah? And
I have to say I disagree. I saw yesterday 30 of them. But okay, fine. And so a second investor, so when you have a project about humanity, who is investing into that? Was that the question?
So you're asking why does no one want to be taking the first leap, the risk at the beginning?
Yes. Why does no one really want to be the first one to fail ultimately, especially on something that is crucial?
Well, I mean, that's a big question. I mean, you look at the situation we've put ourselves into with climate change, and it probably tells you something about humanity. But in terms of who wants to take that first risk, it's about, well, risk is the key to the question. And, there are different investors with different risk appetites, and so some of them will be attracted to much higher returns they can earn by taking that first risk, by being the first mover and getting themselves in a position where they've taken the risk and hopefully won the market or a certain share of it by taking that first mover position. But typically, the sort of capital that I represent in terms of pension funds, sort of low risk capital, we're more likely to wait until we're the second mover rather than the first. Obviously, there's a big spectrum there that you can talk about. That I might be able to take something and apply it somewhere else, and I can get comfortable with that risk. But in terms of being the first to invest in infrastructure on the moon, I doubt that's going to be me and the type of capital that we have.
And I want to close with an interesting question to you, Kareem and Phoebe. When we're looking, what would be the roadmap, if you're looking really into the future, enabled as space mining to become a significant marketplace? You know, what would be the 3 things in 2000, we make it now easy for you, 40?
2040?
Yes.
All right.
Should I go 2035? No, we stay 40. Yeah, so that I'm not knocking on the door, it was not correct. No,
Okay,
it's just
so
kidding.
how do I see the market?
What are the 3 things was making really the roadmap?
So, look, if you want to have an economy on the moon, it needs to have 2 fundamental purposes. One is it needs to have an export market, and one it needs to also import. Because everyone's talking about bringing stuff to the moon, but you also has to produce something. So what is it then producing? It's either producing something manufactured and brought back down to Earth, or it's going out. So maybe, I don't know, maybe there's a moon base.
Or consumed in the moon.
Right, or it's consumed there. So someone works out that, hey, there's lots of water on the other side of the moon. Let's harvest it and then ship it to Mars, as an example, right? And this is somehow cheaper. Well, there's helium-3 on the other side of the thing, and let's use it to fuel satellites. So this is how the evolution of a market happens. And it's very similar to, and we discussed this before, you know, sort of the New World exploration, where, you know, people come with a certain amount of equipment with them to the New World, but then they build an economy. But they need to produce something, so then they have to find a way. Otherwise, it's a failed colony.
We will not be a failed colony. That out of the protocol, we clear that right away. Yeah? So, but that's good. I take this one. Phoebe, you're on the way now to the airport, and the genie will come and say, Kareem and Frank were so nice. I give you 3 wishes for space resources and infrastructure to make it happen in the next 20 years. So the genie is maybe busy.
I think we've probably touched on quite a few of them. From my perspective, it's demand that I think we've already touched on. It's regulation, and it's certainty around cost in terms of both that original build and the long-term maintenance of what you build.
Thank you very much for being with us. Thank you also for the question. Thank your audience for staying the last point. So the message I give to the audience and everybody on the computers, so you have to show these proven technologies, we have to calculate the demands, we have to find the resource of the moon, and the agency have to be the first customers, and then be aware we have your addresses. We will knock on your doors pretty soon, because it will not take until 2040. Thank you so much for being with us. Thank you. Excellent.
Thank you all so much. Thank you for everybody sitting to the very end. Thank you for watching online. By the way, just to place Scott Bryson, it was Toronto, Canada he was writing in from, and he did mean government strategic reserves for supply chains. Back again tomorrow for more fun, and please tonight vote for your favorite poster so that one of those people can win a prize. Thank you so much. Have a lovely evening.
Thank you.